got a question from the radio show, the podcast. Stan sent this. So Stan, thank you so much. It's a really good question. We talk a lot about stock markets and inflation. And throughout history, equities have been the best hedge against inflation. Why? Because what's inflation? Prices going up. Who's raising prices? Companies. What do you own when you own stocks? You own the companies that are raising prices. And specifically, I was just talking about gross returns of the S&P 500 from 1926 through the end of 2021. So a dollar grew to $14,000, which seems kind of hard to believe. I mean, it's a huge amount of growth. But you also have to take account into that inflation, and that's exactly what Stan's asking about. Shouldn't we take that into account? Yeah. When I'm projecting retirement monies into the future, I'm looking at after inflation, because then I can think of the dollars when I'm looking at that new number, and I can think of it in today's dollars to tell myself, am I going to be able to live off of the money that will likely produce as income? So it's a good question. And he says, if you look at that, wouldn't the number be more like $5,800? And actually, it's less than that, a pretty good deal less than that, actually. If you look at how you actually calculate after inflation returns, you take 1 plus the rate of return of the asset category historically. We're using 1928 through the mid of 2023. Those are the numbers I'm going to be using right now. If you look at that, you say 1 plus the rate of return divided by 1 plus the inflation rate minus 1 is the formula that we use. And when we use that formula with a 3% inflation rate, which is pretty significant over time, what we see is that a dollar in large U.S. stocks, as measured by the S&P 500, grew to just shy of $500. Not bad, but a whole lot less when you look at the impact of inflation. And you'll see how big of a deal that is when I get to Treasury bills in a second. Then you look at small U.S. stocks, as measured for the Center for Research in Securities Prices 910, the CRSP 910 index. Dollar grew to about $2,400. So it's just a little bit shy of 5 times as much. Then you look at large U.S. value stocks as measured by the Dimensional Large Value Index. It's about $1,269, so about $1,270 or so. Small value stocks, because now we have small and value, a couple other factors that I talk about that historically have provided additional return and actually better diversification as well. About $8,600, just shy of $8,700. You go, well, that's a big winner out of all of those, right? But we want to own all of these asset categories to diversify us. That's one of the things that we find from academic research. Now you look at that and go, well, what happened if I put all my money in 1 month Treasury bills? Well, the dollar grows to $1.20. It's a big, big difference. So now we see why we want to own equities in the portfolio, even into retirement. If we're looking at what somebody's time horizon is and looking at how much income they're going to take, typically we're going to have equities in the portfolio to protect against inflation. So good question, Stan. Thanks, and we'll catch you next time right here.